Today I will cover some good news for Carvana investors. Yesterday was a big day for the bulls and it was a tough day for the shorts as they got squeezed basically. This stock was more than 50% shorted, and if you guys remember, I made a video a while back when I looked at the most shorted stocks in the New York Stock Exchange, just some light-hearted fun. But in this case, it's basically the profitability guidelines that are getting one over on the shorts. So let's start off by showing the stock price before we go into this article from Reuters. And as you can see, yesterday up by more than 20%. This is a big short-term gain. Maybe some people made options bets here and got really lucky. But in the wider scale, we can see that this stock is still down. It's not the very expensive used car prices that we had in the past. However, could they potentially return to profitability? Well, then some of the investors that are covering is giving a target price of, I think it was slightly above $20. Let's get right into this article here on Carvana and cover it. So shares soared by as much as 55% here yesterday. It was a big day. We see that they went down slightly after that, but once again they endured a turbulent 2022 as the company struggled to offload used cars purchased at higher prices. Remember the whole hysteria around the used cars when there were basically no new cars coming into the lot in the disrupted supply chains, and used cars were extremely expensive. Well, Carvana made a lot of money, but they also bought some expensive used cars at past high prices. Buy high, sell low, well, that's not good for profitability. So short positions in Carvana were at 488 million, with short sellers estimated to have lost 142 million since the stock started trading higher in after hours trading on Thursday, according to analytics firm Ortex. Well, you play with fire, sometimes you get burned. We've seen this in the case with GameStop and AMC, and there was a big short squeeze in Volkswagen at many years ago. So sometimes this happens, and I think it's quite fun to see this coordination of retail investors to go together and push up prices. Some short sellers will add to the buying pressure as they try to close their positions and therefore causing a short squeeze. Well, of course, if there's not a large float out there, then it's hard to get hands on shares, and this is especially true with smaller companies. When there's a lot of short interest, trying to get hands on shares, well, there can be quite a squeeze in that case. With larger companies, this is not an issue as they're very liquid in trading, but for smaller companies, this can have a significant impact on stock price. Investors have sighed a relief on Thursday after Carvana said its adjusted earnings before interest, taxes, depreciation and amortization, so EBITDA basically, were expected to be positive in the second quarter. Well, more bad news for the shorts. If the company is not going bankrupt, well then the stock will not go to zero. That's the thing when you're short. You sell somebody else's share and sure you can make gains on the way down, but if the stock goes up, there's no limit on how high a stock can go, and there's no limit on how much a short seller can lose. So a very risky gamble. Alright, so just what Carvana is known for, the type of business they do, and here we see one of the analysts covering the company upping the price target on the stock from $1 to $21, but super high risk. And we can compare this to what it's trading at now, but take this with a grain of salt. The price targets here, they don't really mean a lot. If you look at averages, you can sometimes get some useful data, but just nitpicking one gives you zero value as an investor. For us to turn constructive, Carvana would need to return to sustained profitable growth. This is uncharted territory in our view, given the company's history and particularly in what we believe is going to be challenging used car supply environment in the medium term. Alright, so thinking about the used car market, it can be difficult. We saw an extreme case here with the supply chain disruption, but in a business as usual environment, how will Carvana thrive? Will they have a tough time? Will they thrive? Who really knows? It's hard to predict. But as we can see, shares have risen 52% so far this year amid interest from retail investors after shedding 98% of their value last year. So it's clearly a bet on a turnaround case for retail investors. If they can make the business profitable, if they can operate in a normal market and thrive, well, then it will be very good for investors, since there's a lot of short interest still in the stock. There's potential for some more squeeze, for some high volatility in the short term, but there's also big risks, as pointed out here, with macro deterioration. So bad interest rate environment, if the auto dealers can't get loans to sell the cars from the banks in a credit crunch, that's a macro thing that could really hurt the stock, and things of that nature. But interesting company, very big swing here in the stock price in the last day, so happy for those investors. All right, and that's just commenting on Carvana. As always, hope you guys make a ton of money whatever investments you decide to make. Take care now. Bye bye.